Hey everyone, I'm Jillian Sidoti with Multifamily War Room, and forgive the way I look right now, but I've actually been working really hard putting together presentations for our big event next week, our 3-day intensive workshop. And really what I'm here today to do is to answer some questions. You see, we had 3 webinars in the last 2 weeks, and we just kept having webinar after webinar after webinar because we had so many people attend. We had 2,500 people over 3 webinars, and so thank you so much. The problem, though, was that we didn't get to everybody's questions, so I took the top 6 questions, and I want to answer those for you now. Okay, so the first one was, what about COVID? Should we really be investing in multifamily right now? And my opinion is that the short answer is yes. Now, does that mean you should run out and buy a property right now? No. What it means is that you should start looking for deals right now, because at the end of the day, despite COVID, you never know what an owner is going through, right? Why an owner is selling. Is it a death? Is it a divorce? Is it kids, having to go to college? Is there a medical expense? You never know why an owner has to sell. And you can pick up some sweet properties regardless of COVID-19 or not. The other reason why you want to start looking for properties now is that if and when, and I believe there is no if, but when there is an influx of properties onto the marketplace at a really good deal, you want to be ready. And what do you need to do to get ready? Well, you have to get your private money lined up. You have to have your website ready. You have to have your social media going. You have to know where to look investors. You have to know where to look for properties. You have to know how to negotiate for deals. So that's why you really want to get started now. You don't build a business in a day. As they say, Rome wasn't built in a day, and neither is your business. So if you're thinking that you're going to buy property, say in 2021, you need to be prepared right now in order to do that in 2021. Or if you start preparing to buy properties in 2021, you're going to miss 2021. All right. So the next question we had was about accredited investors. The SEC expanded the definition of accredited investor earlier last week, I think. And one of the things that they said was that they were going to allow certain professional designations to become accredited investors without actually being an accredited investor, without having the income or the net worth requirements. So for example, net worth of an accredited investor on an individual basis is $1 million. And the income requirements are $200,000 a year as an individual, $300,000 a year as a married couple. And then I said the $1 million net worth exclusive of their primary residence. I'm a little robot when it comes to the accredited investor definition. Anyhow, what the rules now say is that anybody with a Series 765 or 83 license is deemed an accredited investor regardless of net worth or income. So it doesn't really expand the definition all that much. The other expansion of the definition came to different types of entities. For example, Native American tribes were never designated as accredited investors because there was no Native American tribe designation. And of course, there are a lot of Native American tribes out there that are flush with cash and they would like to invest in accredited investor only deals. The third one was about personal confidence. We had a ton of questions that were about personal confidence. I don't have the confidence to raise capital. I don't have the confidence to negotiate a deal. Will you help me with that? Not only am I going to help you with that, not only is Multifamily War Room going to provide those tools for you, we're going to give you a complete rundown at our 3-day intensive workshop on how to build your confidence. We're going to give you all the things you need during that 3-day intensive. And we have a little program called the Executive Council. A lot of you are already in the executive council. You signed up for the 3-day intensive, so you got the executive council for free. And you could still do that. If you sign up for our 3-day intensive, you can join our executive council program, which is an online program where we have videos and forms and calculators and templates and samples, all kinds of great stuff. But the module we just came out with this week for our executive council members covers all that stuff, how to build your social media, how to build your, what did we have in there? We had social media, content marketing, all kinds of great things. There's 10 steps to building your multifamily business, and we give you all 10, and we give you the resources for it, and then we give you some handouts as well. So if you're already in executive council, get into the portal right now and get to that stuff. If you want to be in the executive council, all you have to do is come to our 3-day event and you get a month for free. Yeah. Isn't that cool? So go on over to multifamilywarroom.com and sign up. Okay. So number 4, should we wait? Should we wait? And I kind of already answered this in number 1, but this should we wait question really had to do with markets and cap rates. And look, some markets aren't going to have the most wonderful cap rates in the world. Mom, can you help me with the code? No, I don't know the code to your dad's phone. I'm so sorry. Work from home. Anyhow, they asked about cap rates and should we wait for cap rates to change? And my answer to that is if the cap rates aren't what you want them to be or what you're looking for or what we teach you to look for in a cap rate, then you can look in different markets. Sometimes, look, I will be straight. I think you can find deals in any market. I've done it myself. I've done it in my own personal investing. I've seen my clients do it before. Multifamily syndicators do it before. Fund managers do it before in markets where you thought there were no deals and just come and hit it out of the park, right? Just do an amazing job finding a great property in a marketplace where you didn't think there were any deals. As a matter of fact, I have a young client in his late 20s who found an amazing deal in Los Angeles, California at the height of the market. I'm not joking. And he made his investors about, I think it was like 14.5% return on investment in less than a year. So I believe that there are deals in any market at any time. It's just a matter of how do you look and do you find them and how hard do you work to look for them. And part of what you get in executive council is we have a video in there called Where to Find Deals Where No One Else Is Looking that Charlie Dobbins did, who's my partner in Multifamily War Room. So you should check that out when we release that. And we will also talk about that very topic at the 3-day event. So in other words, don't wait for cap rates to change. There's always deals in your marketplace. If you're not comfortable with what's happening in your personal market, switch markets, switch to another market that you're comfortable with. Okay, number 5 was, there was a recurring question about advertising for investors on the internet. And this is a touchy subject. You've got to be really careful with this one because at the end of the day, it depends on what it is you really want to do. And I'm going to use a term right now, and you'll hear me repeat it again at the 3-day event, investor alienation. Oftentimes what I find is that my clients or potential clients get so wrapped up in the ability to go on Facebook and blast everybody and say, hey, I want your money for my deal. Will you want to invest with me? That they forget one thing. And that one thing is that if you're going to do something like that, you are limited to accredited investors for the most part. I'm being really general right now, very 30,000 foot view, right? So for the most part, if you're going to do something like that, and you're going to blast everybody on Facebook or everybody on your mailing list or whatever it might be, then you're going to be limited, right, to the people who can actually invest with you as accredited investors. So where does investor alienation come in? Well, if you do that and your dear Aunt Sally has always been your greatest supporter, but doesn't happen to be accredited, then dear Aunt Sally can't invest in your deal because you ruined the exemption where she could invest in the deal. What's called 506B and often referred to as the friends and family exemption. So don't alienate dear Aunt Sally for some investors you don't know on the internet. Just consider that. But we'll cover all that. Again, we're going to have a huge module for that in the executive council. So check that out. But I mean, I'm doing a whole section on it during the 3-day about how to attract investors without advertising on the internet. Like, actually, that's my favorite thing to teach about, is how to advertise for investors without advertising for investors. So I'm really excited about doing that whole lesson during the 3-day event. Again, you can go check that out at multifamilywarroom.com. And finally, this was also a question, a broad question we got asked multiple times. Now that we're in a post-COVID-19 environment, well, I guess we're not really now that we're in a COVID-19 environment, hopefully soon to be in a post-COVID-19 environment, what do we pay investors? What are our returns to investors? And that question, the answer to that question is it depends. You know, the reality is, at the end of the day, investors really aren't return driven. They're story driven. They're personal relationship driven. They're trust driven. They're not really driven by returns. But that doesn't mean you can just go around saying, I'm only offering 2% and I hope you trust me. It just means that don't put so much stock in how much you're paying your investors. What you really should be thinking about is you're under promising and overperforming. So for example, if you are going to go, if the deal's paying 10%, don't offer 10%, offer 8%. And that gives you a little cushion of what you can pay your investors. It gives you a little contingency, a little wiggle room there, right? So that's something to consider. But if that's not a good enough answer for you, we have this amazing dashboard that we have built for the event that you can actually get onto right before the event starts, and you can go play in there, and there's all kinds of cool things in there. Like I have a Spotify playlist because I think that's super fun. We have a coaching zone. We have a VIP section for VIPs. Just so many cool things. We have downloads, just real cool stuff. But the one thing I'm really proud of is the calculator I created for figuring out distributions to investors. And I'm providing that for you on the dashboard for the Multifamily War Room Intensive Workshop event. It's next week. If you can't make it, don't worry, because we're going to have the download available. So register anyhow. And you also get a free month of our executive council program, and you can take and look at and play in there as much as you want, and there's no obligation. So, all right, everybody, I'm Jillian Sidoti. This has been Multifamily War Room. Go to multifamilywarroom.com, sign up for our 3-day event, and we'll see you soon.